Hello everyone and welcome to today's morning report with me, Richard Perry, Market Analyst at Tech Markets for Monday the 2nd of June. The PMI's day is today, and the Chinese manufacturing PMI over the weekend came in slightly better than expected actually, about 5-month high, pushed up to 50.8, which was ahead of the 50.6 expected, and certainly better than the 50.4 that had been posted last month. That's the official data, the government data, which is the big cap sector, and that has certainly boosted equities today in Europe and also Asia. Overnight, a bit of sentiment improvement there as saw the Nikkei slightly weaker against the dollar, and that certainly boosted the Nikkei. Sorry, the Japanese yen slightly weaker against the dollar, and that certainly boosted the Nikkei higher. European equity markets equally positive as well. However, the European PMIs have started to come out now, and a little bit slightly disappointing, I think you could say. French PMI data has fallen back into contraction territory, 49.6, although that was slightly higher than the 49.3 expected by the market. That's, as I said, below 50 again, which is not a positive. Also, the German PMI for the manufacturing sector came in at 52.3, which was below the 52.9 expected, and also a decline on last month as well, which is also the weakest in 7 months. So a little bit of negativity in that European data. That's pulled the euro lower, and the dollar is making gains in the early trading in Europe, and that's showing in this dollar index, which had that big decline on Friday, but that's regaining much of that lost ground on Friday in the early trading today. In terms of equity markets, in terms of the risk volatility, the VIX continues to be under that 12 mark and continues to remain very low, 11.4 now. It closed on Friday, and that is extended to the downside. That is a very low level there for the VIX. In terms of the other PMI data that we got out today, as I said, the European numbers are coming out throughout the morning, but you've got the UK at 9:30. That's due to come in at 57.0, which is slightly lower than the 57.3 last week, but still remains very high if that is the case. The US ISM number 3 o'clock this afternoon UK time, that is forecast at 55.5, which is up from the 54.9 that we saw last month. So that's at 3 o'clock this afternoon. So you could get a significant amount more of volatility in these currencies, certainly in the stock markets, as the day goes on and the PMI data all continues to come out. My chart of the day is Euro Yen. I looked at Euro Yen and saw the fact that we've had this big decline over the past few weeks, but then you've started to suddenly get this recovery in play. And I did this chart early this morning before the euro started to fall away in light of that PMI data. But certainly, if you look on a technical perspective, you'd say that these momentum indicators, certainly this stochastics here, has given a crossover buy signal, which has been confirmed by moving back above the 20 line. Also, the MACD lines are crossing as well. So you would say that in light of the fact that the RSI is also above its reaction high peak there, that would suggest that these momentum indicators are urging for a recovery in this Euro Yen chart, and it would suggest that maybe you get a retest of that peak at 39.36, so 139.36 that we saw in the middle of last week. As I said, the PMI data that for the Eurozone has come out, and the euro has weakened, so that's pulled Euro Yen lower. That is the hourly chart that we're looking at here. But you do, while I'm looking at that, sorry, apologies, on Euro Yen, and that is the 139.36 high, reaction high that we saw in the middle of last week, and I still think that we could see a test of that in due course. you've got this small base pattern in play here, which does show the completion and a move above that resistance line there. 138.53 is that support now. And I think that if the euro yen can stay above there, then you'd start to you would still think that a possible recovery is in process, having completed this small base pattern. The caveat to that is these hourly momentum indicators have just fallen away in the last few hours. So potentially that certainly hasn't been helped by the decline in the euro in the recent couple of hours. But that support that comes in between $138.60, 138.50. There's a nice band of support there, and if it can hold above there, then that recovery process may continue back towards that 39.36 level that we talked about on the daily chart. So that is what I'm thinking at the moment. I mean, you do have a whole range of factors that could significantly impact the euro this week. So it is going to be, I think, a fundamentally driven week for the euro. Tomorrow, for example, you've got the big inflation data that comes out, and then obviously Thursday the ECB number as well. So big factors that could impact on this euro, and obviously euro yen as well. So just be careful of that. But through the day, you might have further testing of that support at 38.50, 38.60, and if that holds in due course, then you could start to look higher once more, back towards that 39.36 level. Anyway, I wish you good luck in your trading on the euro yen today, and I'll speak to you later. Thank you.